Have you ever been confused by real estate investing terms? Join me in this video and we'll go over investing terms that refer to income and the calculation of revenue.
Hi, I'm Robert Cackett with Xtreme International Realty, here serving South Florida and here to help you reach your real estate.
Hi. If you've been poking around the real estate investing world, you're probably already overwhelmed by the number of terms and terminology, the jargon that's basically used surrounding all things real estate. Hi, thanks for joining me. And today we're going to look at the different ways that income or revenue is calculated when looking at an investment property. These different ways of looking at income will affect the ratios which you will eventually use, and which I'll explain in another video, when you are analyzing a piece of property. So let's begin. First, let's talk about gross operating income. This simply means that it's the total income revenue produced by a specific rental property. This includes rents, obviously, but also any other income that is produced by that property. For example, some properties, the owners may charge water outside of their rent, or maybe there's a vending machine, or they have a washer and dryer that produce income because everybody uses the washer dryers that are in the property and it's coin operated, or any other additional source of income in that property. And this is the gross amount. This is the total amount of money that comes in without any deductions. Hence, gross operating income. Next, let's talk about operating expenses. These are the total costs necessary to maintain the property in good standing and in running it as a rental property. Now, this includes but is not limited to things such as property taxes, property insurance, association dues, or utilities. But in general, operating expenses are the minimum expenses necessary to maintain the property, as I said, in good standing. Let's look at net operating income, NOI, that we see everywhere. Net operating income is pretty important because it leads to a lot of the ratios and the metrics that investors look to judge and look at a property. And net operating income is simply gross operating income minus operating expenses. In other words, GOI minus OE equals net operating income. That brings us to a fourth definition, which is cash flow. Now, cash flow in the investment community means money that's left over after debt service. So this means that in order to calculate cash flow, you have to subtract from the gross operating income operating expenses and debt service or loan payments. Whatever is left over is your cash flow. Cash flow can be positive. That means after you pay your mortgage, after you pay property taxes and all the utilities, you have money left over. And it can also be negative, which means that you're actually putting money out of your pocket and into paying the bills. That would be a negative cash flow. Finally, let's look at vacancy rate. This is more of an accounting type term that refers to the time in money that a property lies vacant or unoccupied. And it's important to determine income because it's part of the analysis investors will do as they try to calculate cash flow, rates of return, cash on cash returns, and all those nice ratios we'll look at in the next video. The vacancy rate does play a factor in determining overall income and is used basically as an analytical tool necessary to gain a really good idea of cash flow in a particular property. I hope you've enjoyed this video and you have a better idea of what investment terms are when it comes to revenue and how revenue is judged. So we know the difference between gross operating income and net operating income. Join us next time, and in the comments below I will put the post for our next video, which is the second part of the investment terms, where we'll touch upon the ratios that are used to evaluate investment property. See you then. Thank you.